Good night. So, told some people that I'm gonna make a video about the day today because I saw the day very interesting from the point of view of price action and the signals that the price action gave us today. If we were if we're domaining if we have domain of the myth of the Albrook's method, you can identify those signals that can help you to drive a great day today. Started the day red, but then turning into green just right after bar 21 trade. So I'm gonna try to make a recap of the best trades today, and try to explain what is really happening and how you can try to figure out how to do in this kind of price actions, and explain the evolution of the cycles that we have during the day and how it changes from the event that is from a cycle to another, and how to switch and when to switch to a different context of the market. So from always in short to always in long, for trading range context to breakout and spike and channel, for example. So we will see that today. But before that, please subscribe to our channel, to my channel. If you don't do it is at this time, recommend it if you think that is useful. Take a look on the video and see if you can find some important elements for you improving your trading strategy or your trading management during the day, and then share with people that you think that really need it or is part of your groups, study groups. um, and finally, give me your light. I think this is ad hoc work. Not, you're not paying anything for this, so just give the light. And before I start, I wanted to share some news with you. Um, with some colleagues, we decided to look for another space to debate. To It's more open space to debate, a more inclusive space to debate, where we can start it together, and and we feel free. You feel free that you can share whatever you have. It doesn't matter the level of maturity that you have trading or um, the method, but it needs to be price action our books method. That's what that this is about. So we created a server that is named Monster Trader Squad, and we're gonna start making this public. Then we'll decide if we're gonna continue public, or we're gonna close that for determining groups. But the only rule here is participation. You need to participate in any way. You can write down, you can participate of the studies during, we need to kind of make a planning this, and then you can even participate if we have in a voice channel, things like that. So Discord gives us that advantage to be connected. So that's the idea, to share or knowledge, and all, learn each from each other. So if you are interested to participate to Monster Trader Squad, please let me know in the comments and of the video, and I send you a message, an invitation, in your private account. So that's basically what I asked. So I will just add by invitations, for the ones that wants to be part of. Okay. So with that, let's go to the recap. Let's take a look at the data. I'll try to draw here while I'm talking, and I was speaking with the people, where we were studying together, or during the session. That is a good day to talk about, because there is some signals that we need take into consideration. It's important that we can understand those signals that price action give us. And I will say, and I comment, I will say, just Brooks trading course could give you that ability to let's say to understand what happened today. I would say, or even anticipate what we could happen. So let's try to see whereas the bar by bar that could tell us a story about what's happened today, right? So it's important. Remember that we came from a day where we had a strong sell-off at the end of the year, at the end of the day. The day was kind of trading range day, right? Expecting for the Fed, the funk definition. So we have a double top and then strong sell up. So it's a low probability event, this one, because the way that happens, right? But it was a strong sell off. So we cannot ignore that. So when we see in the daily chart, we have a good bear bar, right? But normal bear bar, let's say it's normal. So we are in a broad bull channel in the daily chart. So it's normal to have one day of bears. So we have that day yesterday, and we coming from that, and we have a clear swing below 4900. So was a swing here below 59. It was clear swing. There was a support, that swing that was tested several times. If you see the daily, you can see clearly that this 4900 is a really point where we need to pay attention, right? And we'll see what's happened today with that swing point. But then this leg here sell off is a low probability event. So we were in a trading range. Is what breakout or breakout is always a, let's say, a low probability event. Then we have this the day, and I always say that low probability events for me it's always revert in the same way in a low probability event. So that's the only way that could revert. So that was something in a scenario that we can even expect for the rest for the next days after the sell-off. But I will never expect that it's gonna happen in just one day, right? So that's today. It's today. Even if we have more than 80 points of sell-off here or something or so, right? So it's really huge setup sell-off, right? uh, but they starting the day we have a good bull one b1, but then it is testing this high in the 71 yesterday. It was not a good location. It's opening gap, so you can think that this ball bar is a good bar for both. I don't think that, because we are high versus this trade range, this swing here. So this swing we need to really take a look and see what's happened there. And then bar 2 and 3 are kind of this is 3 is as inside bar the 2, but they're part of the it's a flag for the this say this impulse here, bull impulse. And then we have an OB in 4. So then 4 is an OB failing in the test of 71 high, and even the low 59. We can say that it's tested low 59, but I think that it was just one tick that was pending from filling this gap here, this swing gap, right? So the thing is that it could goes up and fill out this gap here, right? So the stop cannot be here. So stop needs to be a little bit more, even above this red line, in order that if you have on a second leg, you can you can get out. So that's the difficulty of this trade here in the bar 4, but you have an inside bar here in 5. So IOI, so we can put this IOI pattern. You know, if we consider 71 like the top of the trading range, this trading range here, so this is a good setup for selling. This is a good setup for selling, so you can get short below the second inside bar, that is a bear inside bar, which is the preferable inside bar. So you can get short there. That's that's a normal trade. You have a clear target here, closing this gap, so you can get short below 5. So you always needs to take a look what's happening in the opening, right? But the 7, despite this is a it's an outside bar, it's another outside bar, so outside. So you should think that, well, they will be a next part will be more trading range price action, right? Because this 7 is outside, this is another outside, so we could have more trading range price action. The thing is that 7, and I took that long. When I explain my trades, but you know, I did sell 5, and I then I reverted back to 7 here. Well, that's a good bar, very good bar. 7, you know, failing in the median in the moving average, failing below 1. So we have buyers here, we have buyers here, right? So it's a kind of double bottom, it's a kind of spike pullback, 1 2. So we can go up, right, to test this point. So that was the reason about 7. The thing about 7 is that was a huge bar, was kind of more than 10 points, and when it goes more than 10 points I use micros. So for this one I use micros for 7. So I use micro for 7, and then comes couple of inside bars. So IOI, outside bar, II too. So II, you can think on get short here, but you have a good spike here. So you can wait for the third one, and then 11 give you a good reason to stay. It's failing the close of the 7. What it means that the bears that's selling in 4 or 5, they are getting out here break even. So this 11 is a good reason to stay. So if you have II here, so you want to sell this one after this spike, is not recommendable because you are coming from a good spike. So it's better to wait for the next bar to see what's happening. And with this fail here, with this tail, or definitely closing above the half of the bar, you're not gonna take this short. So you stayed in your long, and then came up this 12. Right? These are very good 12, but 1 2 3 wedge. So wedge, and testing what? Testing the swing point here is about 4,900. So this is a major resistance, right? So when you have that major resistance and you don't have follow through for this bar, this is a exhaustion bar, and you can do the following. This is an exhaustion bar. You can make this one. This is a exhaustion move, and look at that. This is the first time that I'm doing here. while I'm recording this. I didn't see that during the live trading. Let me put it here. So that exhaustion, sometimes it's difficult. Let me put this bigger here. Here. Look at this. So this is an exhaustion lag. So when it's happening and it fails with 13, it's enough to get short because when you have a wedge, um, you're expecting to have momentum after above this bar. So if you're in this trade, for example, and you get this bar, you expect to have follow through. If you don't have follow through of this bar, you need to exit. It's a wedge. So basically, that's what you need to do. So this 13 is short below the bar. Okay, it was triggered on 14 or 15. So 14 is a short, or 15 is a short. All those bars are short. I was long, so when I see these, I was kind of busy at that time, so I didn't see the 14. But below 15 is the last. Let's say is the last bar you can wait. So if you are here long, you put your exit here below 15. That's basically what you need to do. Okay, to manage this trade, for example. So then 15, 16 put the market, and 70 put the market always in long. These two bars. This is always in long market. Okay. So, but you have an exhaustion gap here, exhaustion and you see you need to put that down as a target. So, right. So you see 16, 17 closing in its lows. Very nice. So you expect a second leg down. That's basically what you expect a second leg down. And you see that you have a space until this target. This is a magnet. So we should fill this gap, right? So then you have the exhaustion, you have the target is here. What's happening? Are you not gonna get short because the target is here? No, no. You have more room downside. So you can sell above this 19 because you are going strong micro channel. Bar 18 is a good bar because it's low, closing below the 7. You have a space there. So the first tentative to go up to reverse is gonna fail. So above 19 you can sell. This is a H1 failed H1 setup. So it's normal to sell that. The issue with this is the stop. Where should be the stop? Above 17 at least. So it's too expensive. Or you wait for 20 to to um, to close, and you sell the close of 20. If we see that, or you enter using M1. Let me show you how. This is M1, 1 minute chart. So if you are here, this is 1250 something here, right? This is a sell-off. Look at this. This is 2 bars 1920 here. So what's happening when you are in a strong trend? When you are in a strong trend, but usually here in the 1 minute chart with the moving 20 moving average is the following. It trends to fail when testing EMA 20. So when you are in a strong trend, doesn't matter if bear or bull, it usually goes to the moving average in 20 and fails there. When I see that, I always tell for everybody this is a healthy trend, strong trend. So this is the first one. This is 20. So 20 goes there, right? And failed. It's expected. One, two legs, and start to get up again. So this 2021 is here, right? And then 22 is a H2 here. You see here, there is a 22 goes up. So this is 22 here, right? And you see it's failing in the so you want to get short, you can get short below this bar in 1 minute chart, below this bar 1 minute chart, below this bar 1 minute chart. You can do all those trades here. Where's your stop? Your premise is you don't want bars, closing above moving average. That's the premise, right? So you put a stop above here. Doesn't matter if you go there, after that is hit it you and then coming back again and swing you. No, doesn't matter. But this is a premise. The premise is I need to have closes below EMA 20. That's basically. So we sell here 20 or so, and then 21 is a failure, closing, close to the 20 low, and if you have this exhaustion already done, you know that it's a target there. It's pretty close to the opening gap, so which is really bother me. But when I see this and I saw in one, first thing that I did was, okay, so this is, we expect to have above this bar is 21 sellers below this, sellers, no bulls, right? So this 22 try to get up and try to come back, and it makes a swing in the closest 21, right? And then here, when it coming back above 22 during this bar here, this is the height of 22, I think, yeah, this here, it means that it's gonna revert. That's basically what I did. I bought above 22 using M1 as a reference, both here for 80, something like this. So I bought this here, couple legs down, get a target, and I bought here. What are you looking for? Couple legs up, basically, right? Above 22. So those are the key messages here. One, a target, exhaustion gap target. So it's here, going in the tick, at the tick. Then you have second leg down, failing. So this is a L1. This is a, yeah, this is a L1. This is a L2 or H2 here in 22. Try to make a L2 and failed. So when the price goes up 22, I enter with a stop loss. You're crazy, Eddie? Well, could be. You can say that, but that's what I was always doing. Validating premises, and for me 22 needs to have the third legs down and close this gap, and didn't do it. So what it should be Here is 22 half follow through bear, close this gap, and then a wedge, one, two, three here. But didn't do it. Let's goes up and reverse. So I took 20 above 22, went long, and then 25 as 16. That's the four bar, bear bar. 25 is the four bar in the micro channel. Put the market again always in long. At least for the next bars until the two legs. So 25 is the key bar in this pattern, at this time. And then Albrook's has a study that say by bar 18 we have 80% of chances to have the high of the day or the lower of the day already defined. That's a study that he has in the course. So you can play with the statistics always, and you can even make a review of that to see if it's that true. I had made those tests in Brazilian futures. It works exactly as it says. Of course, we have to make the equivalent in terms of time bars, but it works pretty much the same. That's a statistic that always helped me to try also to try some low probability trades like this, right? In order to get a great reward. So, where is the exit here? Exit is here for 90, for 900. It's okay to exit, okay? But then you have a 25 points market, so it needs to expand the range. That's another element you need to consider. You need to expand the range, so you can wait for, if you have more than one Emini or macros, you can wait for one more bar to see what's happening, right? And I wait for one, and then came this 31, 32. That is the couple of bars that change the market cycle. We were in trading range here, expanded triangle, right? And those were the bars that changing this trading range to the next cycle. That is breakout and channel. That's what's happened here. Breakout, 31, 32. Pullback, first test of 36. This is a H1. It's a H1 bear flag, bull flag. And this time you can expect to have a breakout pullback here. So this is a breakout pullback here. So you need to expect that. So we're talking about swing that is major swing here. So it's not gonna go so quickly, right? So it needs to go here to make a swing, testing, and then go up. So this is a H1 bull flag here in 37. So I can take I take that trade here. 37 above 37. It was buying above bars, right? So I did a trade. I think that I get out here below 35. If I'm not wrong. Was wrong. From this trade here, I got out below 35. I can make 20 points or so, or below 34, something like that. I made 30 points, 20 points here. I made my day in this, to be honest, in this trade. Once you have the breakout and then you confirm there is a healthy breakout, second leg up, and then second time that it's gonna test the breakout point. And then we have the 44. You say this is an H2 bull flag here. But the point is that when you have this strong leg, right, the several second leg up, so it's this is a this is a breakout leg, right? You can make this something like this for 934. So the first stuff that as a target that I looked was for 934. That was the first target, and I think that is the target. There's no more target like this, you know. This is like one, like two target. And my exit was there. So leg one was B 21. Leg two was B. We can say B 36, 37, or we can say B 44. It's better. Let me use a little bit here. B 44. It's gonna be, yeah, something like that. And then we have here height of the day on 490.30. That is a major resistance, so we need to be careful of that. So of yesterday, major resistance. You have an open gap above that two here, where the leg one, leg two target is, right? So leg one, pull back. Let's get for leg two here. That's the target, people. If somebody's gonna tell you, oh no, target is 100 point above, that's blah blah blah. To be honest, that's blah blah blah. We will not. I will not imagine that it's gonna close like this. That that's a plus. Let's say the target is here in this line, here in the leg one, leg two, at this time, right? So whatever we do here, market put here, market is always in long. So we should think just in buy. So this here is not enough to sell. So forget it. There's no reason here to sell. Even with these small bars. The only reason, the only way that we lose the premise on always in long for always in short is to get bars closing below this 44. So at this moment, it's always in long. Good 40, good 41. I should exit here for this long. I didn't, and I pay expensive for that, right? Because this OB was attracted enough for getting more sellers like 43, right? 44. But I get out in break even here. I didn't like that, so get out in break even. But 44 is the test of the breakup point. So 44, the test of the breakup point. What I did here was I fade this bar with micros. So you can buy this here. Essentially. You can buy this here. You can buy above that bar. Why? Because this is a breakup pullback setup in the moving average. Come on, guys. This is a really nice trade. Where is the stop of this? Below 31. That's the breakout pullback. That's the breakout bar. So you buy here below 31. It's about 10 points. So my risk management accept that. It's about 10 points. So 44, you have a great bar in 45, and then pull back, second leg up in 49, and the second leg down in 50. So if you consider this a wedge, 1, 2, 3, right? One, two legs down is what you're expecting from a wedge. So what is happening here is if you have a wedge one, two, three here, right? G41, it makes the two legs that is expected for a wedge. When it makes two legs for a wedge, what do you expect? Resumption of the main trend, that is this trend. So 51, I get long again. 51. It was the best of the best. The sidebar, it was great. The sidebar closing above the moving average, so we can buy that one. Then 52, great follow through. Doji is a OB doji. So this bar here was about, I think, well, we need to have closed above 49, right? That's basically what I expected. And 55 was the best of the best bars. This bar here, 55, what's happening? Close it above this close here. You see, it was the last bull bar. So when it's coming again to test, if the bull are disappointed, they're gonna get out here. So we have a couple of bars here with bulls exiting. So what I told to the people is, if we have a close above that close, like 55, then bulls are in total control of the game. And that's what's happened with this beautiful 55 bar. That's a beautiful bar. When it's happening, these guys here, bears guy, bearish, were trapped here in 55. That was that 55 did. When these guys are trapped, what they did, they tried to sell up in order to get out the break even. And look at this. Look at this, bird. Look at this. Look at this. Look at this. Look at this. So, let me explain this. This is something that you can figure out during the real time, right? So, you have 57, right? Are you gonna say you're gonna get afraid because 57 came up? If these guys are, here that 55, let this guy, trap it. So they're gonna sell more above, perhaps here, with this reference, right? And they sell it there. It's a good target here. Let's see. You're gonna sell more there, right? And then get out the 50%. Look at the beautiful here. Right in the close of 61. So 55 let bears trap it. They sell above 56 in order to get break even in 61. And that's why 62 happened. This guy getting out, and then if you see, starting 62, everything started to accelerate. Right? That's the reason why this 61, I was long. So I didn't get out on 59, 60, or 61. I put my stop below 52 here. I did buy here, right? I did buy here. I did buy here and exit below 57. To be honest, I didn't like this L2 double top stuff. So I had exited below 57 as my management discipline rules we have, and then buy it again a little bit high, 58, but I was preparing to buy this bar, right? So I was clear on that. So I buys this one, put it in stop below 52, and then when 59 60 came up, 60 fell in 60, and the close was 657, right? And I make this stuff here. I On the regression, I see I will wait to test the moving average and see what's happened with the next bar. But that what I did, and then 62 make me happy, and then I told to everyone this is gonna be explode up, right? And what was the target? Is always the same target, 4934. That was my target. And then we get one leg, two legs, or one leg pull back, second leg here. I didn't like this failed here because it was in the close of this bar here. So it was a kind of, it was high already in this huge trading range. It's the start of the sell-off. So I didn't like that fail. 75 make a new high. So it's normal to have bulls taking profit, but 75, 70, 75, 76 were good bars. So I put him stop below 69. That was a mistake. Put me stop here, but doesn't matter because when you don't lose your premise, it's okay. So I put me stop there below that bar, and 77 exit me for this trade here. So I get some points here. Good. So but then when 77 closes, I divide again that bar. So this is the rule. You have to buy it again. Right? And then looking for this target, put it my limit order there, and it was hit during 8. That was the day. It was a great day from the point of view of points. Took some stops, so it was not the best day from the financial perspective, but the the way that I figured out the day and traded was very satisfied. Was very satisfied. Clear price action. Perhaps this one going below this 69 or something that I wouldn't like. Perhaps a double bottom here would be better, right? So, but yeah, the rest it was clear price action. Another thing that we can use here. This is a fail wedge or trading range that is being broken out, and this 69 is a breakout pullback, so you can buy here, right? But then 77 is another breakout pullback, so after a new high, so it's kind of another expanded triangle, like very dangerous, but we are in always in long mode, so it's good to always be trading weight trend, basically that. I think that for today, what I learned is we need to really leverage the good exit. This 41 was a good exit that I uh, didn't leverage. I was waiting for a huge bar like this to exit. 78, I was expecting a follow through. It was very close to this target, so I'm waiting for the next bars. And some days like this, usually they close in the high, right? So that's basically what's happened. But I never think that it's gonna make like this. It was more than 20 points up, right? Where I exited. That's okay. I made my day, but I wanted to make the point about the signals that you can see here, where it's it can help you to take decisions. Another piece that you can use, we were using during the afternoon with the people, is use 1 minute chart to when the market is strong, right? So just take a look. For example, 44 is 1530. Let's see. Okay, this is this is 50 and this is 44, right? Very scary, right? So scary. This is an IOI here below, right? So see here, yeah, IOI. So then when you see this spike, pullback in the EMA fails. Second pullback in the EMA fails. Third pullback in the EMA fails. Three fails, consecutive fails, and then the second leg down. This bar 50. When the 50 came, you see here clearly this is an impulse. L1, L2 fell, and a tiny inside bar here. So this inside bar is a buy, right? And then you can use to make this. Right? You see here how in this impulse it's failing when testing here in MA20. So when it's in always in long, in this case on a strong trend, if the trend is strong and healthy, it needs to fail here in the EMA, in the moving average. Okay. And then this is 62 here. So let's say that you came here, right? One leg, two legs, three legs down, double bottom here. Right. So this is 61. One, two, three, double bottom. You know, we see there is a micro gap here open. Two. This bar here is an entry. Above the EMA is an entry. And then explode up. Then we see here, this bar here, testing the EMA, is an entry. We're in strong trend at this moment. So any bar closing above the EMA, like this, is an entry. Like this is an entry. You can fade this bar too. You can fade this bar too. So those are entries. This is 69 here. You see, one leg, two legs, three legs, wedge. This is an entry here. Right. One leg. This is just one leg. Second leg up here. Second leg up. Third leg up here. Right. Three legs. And then again, failing in the EMA. So you buy this one. You buy this one and go up. So this is the buy here. 78. I started 78 if I'm not wrong. This here. So you can, with a stop of, I don't know how much is the stop. Let's see, but let me put it like here. Ruler. Right here, let's see. 5 points. 5 point stop, you can get all the stop. If you're fine, you just let the rotor and see what's happening. Right? That's what I want to show you today, how to use 1 minute chart when this trend is strong. What are the signals that we can use for reverse or at least exit your trade? You're gonna exit your trade just here, just exit and wait. That's also a good strategy because you can get long here and make the third legs down. That's okay. It could happen. Yeah, you have a magnet here. So, or you re-enter here as idea enter here. So the price action regarding get trapped is in this trading range here when the 50 get trapped, 50 bears get trapped, and help us to have this final push up. The breakout pullback setup that is nice. This is a great setup. Even you have a double bottom in the EMEA, in the moving average, this one or this one, it's the wolf flag. Those are really great trades with a clear stop, technical stop with a clear target for swing, so or for even for scalp. So you have all the elements here to identify any of these trades like what one of the best trades, right? And that's it. I will not buy here. I will not sell 17. I would sell 16. Yeah. If you see there is a trending line here, so you can consider 16 like breakout of that trending line. So 16 started to put the market always in short. This one. Okay. I don't believe in people that say that was expected to go there. No, 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 no. What is expected is to reverse this leg. That was expected, yes. So until here, we're fine. So that's expected. Okay. After that, this 30 more points or so, we're not expected. That's a low probability of it. That's it. Thank you very much for watching me or hearing me or listening me up. I think that this day was very interesting to make a video. So I hope that all the elements that I mentioned here could be useful for your trades in the future days. Tomorrow is Friday. Good luck. Good trades for tomorrow. Thank you very much. Don't forget to get a like. If you are interested to participate of Discord study group, let me know in the comments. I'll send you in the private the invitation. Thank you very much.